Normally, when you purchase a vehicle, you're able to write it off over 5 years. So let's just say you purchased a vehicle for $50,000 and you're using it for your business. You're able to write off that cost over 5 years. However, there's also something called bonus depreciation, and that bonus depreciation gives you the ability to write off that vehicle's costs at a higher rate.
Are you ready for a successful retirement? We're addressing the topics facing today's retirees. Welcome to Retire with Ryan. Now here's your host, Ryan Morrissey.
Welcome back. This is episode 106. If you are a small business owner, either a sole proprietor, a single member LLC, maybe multiple member LLC, or a C Corp, or an S Corp, and you are potentially in the market for a new vehicle, then you want to listen to this episode. There's potentially a way for you as a business owner to purchase a new vehicle, maybe even a vehicle that you didn't think of, and be able to write off 100% of the cost of that vehicle in this tax year, 2022. As a small business owner, you're able to write off your business expenses, standard supplies that you might purchase, subscriptions or fees that you pay for different operational costs of your business. But you also have the ability to purchase equipment and write off that equipment under what's known as Section 179 depreciation. Now, cars, trucks, SUVs, they fall under that category of Section 179 depreciation. And normally, when you purchase a vehicle, you're able to write it off over 5 years. So let's just say you purchased a vehicle for $50,000 and you're using it for your business. You're able to write off that cost over 5 years. However, there's also something called bonus depreciation. And that bonus depreciation gives you the ability to write off that vehicle's costs at a higher rate. If you purchase a vehicle that weighs over 6,000 pounds, then that gives you this ability to use this bonus depreciation. Now, when I'm talking about the weight, I'm talking about the gross vehicle weight, the GVWR. And you could look that up online. I'll put a link in the show notes to an article that highlights a number of SUVs that have a gross vehicle weight of more than 6,000 pounds. But there are a number of these SUVs that you might not have thought would weigh or fall into this category. Now, the way they calculate this is including passengers, fuel, and cargo. So it's not the weight of the vehicle, it's assuming the vehicle weight when you're operating the car. And if you ever were to open one of these SUVs, right inside the door, somewhere on the door frame, is a sticker with some information, and on that is this number, this GVWR. So that's one way you can verify this. What's interesting to note is that there's a number of popular SUVs that you can purchase that weigh over 6,000 pounds. So if you were considering buying a new SUV and you're a small business owner, you definitely want to consult this list and make sure that the SUV you're purchasing falls on this list. So that would be the first step. Now, how can you actually write off 100% of this cost? Well, that would be if the vehicle usage was 100% business use. Maybe it's a SUV that you buy that you transport different things for events that you run or deliveries or whatever it might be. If the SUV is 100% business use, then you can write off 100%. So let's just say you purchase an SUV for $60,000. Then if it was over 6,000 GVWR, then you could write off 100% of that cost. Now, you'd want to make sure if you were going to take the 100% bonus depreciation that you had business income equal to at least what this cost of a vehicle was. So you'd need to have a business that had business income of at least $60,000 in my example. And in that case, if the business was using this exclusively, this automobile for business, you could write off 100% of the costs. But let's just say that you also use the vehicle for personal use. You'd want to calculate how much of the usage was personal versus business. Let's say it was 70% business use and 30% personal. In that case, then you could write off 70% of the automobile. So this could be a big win for you with your business if you're having a year, maybe this year has been a good year for you, or you project it to be a good year business-wise, and you're concerned about going into a higher tax bracket, then by purchasing a new vehicle, if you were going to purchase one anyway, by buying one that is on this category, then you can then write it off. Now, the IRS has vehicles fall into really one of two categories. And first is light section 179 vehicles. And those are vehicles that have a GVWR of less than 6,000 pounds. So this could be your typical passenger car, smaller light SUVs, small pickup trucks. And in this case, your maximum write-off is $10,200 in the first year, and then you write off the remainder of the car purchase over the next 5 years. But what I've been talking about is the next category, which is considered heavy section 179 vehicles. And those are vehicles with the gross vehicle weight between 6,000 pounds and 14,000 pounds. So you can imagine most trucks that you would purchase are going to weigh over 6,000 pounds. It's really in this gray area where you can find a number of SUVs that could be in this category of weighing over 6,000 pounds. So you might be thinking of in the past, when the Hummer was really popular, about 15, 20 years ago, many business owners ran out and bought Hummers because they were pretty cool to drive and they weighed over 6,000 pounds. And the IRS put some stipulations in there that limited the write-off on a Hummer. It was called the Hummer rule. But now it's because of this bonus depreciation for 2022 that applies, that now there's a lot of these SUVs that are on this list again. For example, some of the more popular SUVs that you might see out there, something like a Ford Explorer, Ford Expedition, those qualify. A GMC Yukon, for Honda, a Honda Pilot, Honda Odyssey. For Infiniti, the QX80. And for more luxury cars, you have the Audi Q7, BMW X5. Now, when I'm talking purchase, you might be thinking, well, I have to pay cash and purchase this 100%. No, you don't. You can either purchase it for cash if you'd like, or you can take out a loan. And both those forms of payment are fine as far as the IRS is concerned. If you're leasing the vehicle, you also can write off a certain amount of the vehicle, but that's going to work a little bit differently than if you're purchasing the vehicle. And there's also the possibility, too, of coupling this with the electric car or hybrid car tax incentive. You may have listened to episode 63, Is an Electric Car Tax Credit Worth It? I'll put a link to that episode in the show notes. But if you remember, you can be eligible for up to a $7,500 tax credit for purchasing a completely electric car, but also a number of hybrid cars qualify. And a hybrid car is a part electric, part combustion engine. So for example, I mentioned the BMW X5. The BMW X5 weighs over 6,000 pounds, and they also have a hybrid version that is going to allow you to take that full $7,500 tax credit. So that is an even bigger win if you're in the market for purchasing a new car, where you're getting the $7,500 tax credit. And then if you own a small business and you're going to use this car for partial business use, you can write off a certain percentage of the car for business use as well. Now, the difficult part with buying a new car right now is that it's hard to find a new car because of the backlog in inventory. So you might have to wait a little while to take advantage of this, but hopefully if you're in the market for a car and you find a car on the list that fits what you're looking for, you can make that purchase happen before the end of 2022, because I don't believe this bonus depreciation is carrying over into 2023. So you still be able to write off a large portion of the car, but you won't be able to take advantage of this 100% write-off potentially that we have available to us in 2022. The other thing too is that if you are starting, you can start a small business. Maybe you're starting a small business this year and you believe that you'll have a significant amount of income from that business and you're looking for ways to reduce your taxes on that business income. One way is through purchasing a vehicle and writing off part or all of that cost. Another way also is to set up a small business retirement plan. And I have a number of episodes on that I'll put a link to in the show notes. So to summarize, if you're in the market for a new car and you're interested in a small truck or SUV and you have a small business, consider checking out the list of cars that you can purchase that might qualify you for an additional tax deduction. Have a great week, and I look forward to talking to you next Wednesday. Take care.
You should consult a financial advisor familiar with your specific circumstances before you make any financial decisions. Nothing in this broadcast constitutes a solicitation for the sale or purchase of any securities. Any mention of rates of return are historical or hypothetical in nature and are not a guarantee of future returns. Ryan Morrissey, CFP, is an investment advisor representative of Morrissey Wealth Management, LLC, a registered investment advisor.